Hi, welcome to WealthMills Securities Weekly Market Wrap. It's a joy for me to come before you to share about market updates always. Last week, markets were in a consolidation phase, and when we observed the US markets, they were also in consolidation phase, and the Dow touched a all-time high of 29,000, and whenever the Dow touches all-time highs and whenever there is a significant uptrend in Dow, we call President Trump as Uncle Trump. You can see the tweet. That is the importance the US market gives for the stock markets. Whereas in India, we don't give so much of importance to stock market. We believe in the days to come that importance will emerge over a period of time as the economy progresses. Nasdaq, after touching lifetime high, there is a significant sharp cut in the so-called technology stock, especially the FANG stocks, Facebook, Amazon, Netflix, and Apple kind of stock. They witnessed a sharp dip in these stocks. Of course, after witnessing a humongous rally in these stocks, there is a possibility always to take some profits from the table, and the stocks can spend some consolidation phase. The same kind of consolidation we may expect in India also, because we have witnessed a tremendous rally in Indian markets starting from March 23rd. But if we observe the cash volumes in Indian markets, especially from 1st of September last week, the cash market volumes in the market came down nearly 30 to 40%. The main reason to see such a sharp dip in the cash market volumes in stock markets is because of the SEBI newly introduced regulations. The first and foremost is for NRI customers, the non-resident Indians who invest in India, there is no change in terms of their investment process is concerned. Whereas coming to the Indian investors, resident investors, whenever an investor want to invest in Indian markets, they need to give upfront cash margin, which is the VAR margin, which is called value at risk margin, which is determined by the stock exchanges regularly, and it has to be given to the broker upfront to buy any position, any stock in the market. And also the margin trading, where in the trading on a daily basis, the margin trading derives the highest amount of volumes in the market. Due to the new regulations of SEBI, whenever a customer want to do a margin trading with his existing stock position, the same customer has to pledge these shares with the broker through custodians. They need to give an authorization through a one-time password, and whenever their position is settled, they need to unpledge the position. So the market infrastructure is not ready. This was the reason there is a significant dip in the cash market volumes. As at WealthMills Securities, I take care about compliance also. Apart from the research, I can understand the nitty-gritties of the market and the process very well after taking this role. Normally, whenever we pay money to the exchange on a daily basis for the settlement of funds, once the stock exchanges receives the money, they will be releasing the margins to the investors. Due to this, the new settlement cycle and the new settlement process, the margins which are supposed to get released at 11 a.m. in the morning, they have not released it throughout the day. So this has become a very significant problem to all the industry that led the volumes to come down in the market for greater extent. This I just want to educate our investors. As you all aware, there is a news coming across the news channels and media channels about the new regulatory norms. And also investors, whenever they sell their position, if they want to take a position against their sell position, they can take once the shares are given to the exchange in the early pay-in account. So at WealthMills Securities, we don't find any difficulty or we don't find any delay in our progress. We have been following this process from years, which the SEBI made right now as a standardized process. Of course, we don't do any margin trading because predominantly all our customers are non-resident Indians, and as per the regulations of Reserve Bank of India and SEBI are concerned, non-resident Indian customers are not allowed to be in the part of the margin trading segment. And also margin trading is a more leveraged kind of thing, so we don't encourage the customers, the domestic resident Indian customers, to get into these kind of leveraged products with WealthMills securities. We encourage the investors to invest in a prudent way than going with the leverage in the market. While coming to India's GDP data last week, the GDP of India came down 23%. Of course, people were afraid of the GDP, the growth coming down to all-time lows. I have not witnessed GDP coming down 23%. What I believe is, of course, when we are in the lockdown, when the economy is completely closed, it is expected the GDP is going to come down. What we perceive is GDP is a post-mortem data. The low trend and the low GDP factor is already discounted in the market. That's why when the GDP data came down, even though people were worried, investors were worried, analysts were worried, market have not came down. In fact, it went up. But the reason the market went down on Monday was because of the geopolitical issues. There was some tension between India and China in the borders, and also one of the reason is the new margin requirement rules that brought up by SEBI. While coming to what market is looking right now is the PMI index. PMI is the Purchase Manager Index. It gives the order book position of the companies. India's PMI index, when we see for the month of August, the PMI index from 32 points, it went to 42 points. So we can see there is a gradual recovery in the Purchase Manager Index, which gives the future forward earnings of the market, and market is trying to discount the forward earnings going ahead. And once, as we are in the September, the economy is coming back, lockdown restrictions are getting eased. So what we expect in the days to come, next few quarters, the companies, we can expect the pent-up demand for the company's earnings. We can see the numbers of automobile industry, and in the market we have been witnessing a rally in the auto stocks. For example, today, that's on Friday, markets came down the Sensex came down nearly 600 points, whereas the only one stock that is up in the entire indices was Maruti. It is up by nearly 3%. So this is the only stock was holding in green. This we expected long back, that once the lockdown restrictions are eased, people prefer a personalized transport, and there will be a significant demand for the four-wheeler segment. That's what the currently market is witnessing. And at WealthMills Securities, we were confident when the whole industry was negative. We have been accumulating stocks in auto sectors at a bottom levels, and currently we are trying to book some profit from the table in Maruti at present. That's what we are doing. Of course, our long-term outlook is very positive, but we want to take some profit from the table at these levels. But any dip in these kind of stocks, we will be re-entering and building up the positions. As you all aware, Indian markets in a very much uptrend right now. What we are going to see is 11,300 is the mid-term, short-term support zone, and 11,000 is the significant support zone for the markets. Next week, we are going to witness a consolidation in the market, where we need to be watchful what's going to happen in the geopolitical issues between India and China in the borders. That's very important issue. Markets are looking forward for the peace in the borders. That's very important for Indian markets. The data says last 6 months, this year especially, nearly 50 lakhs accounts have been opened for the retail investors. This is one of the very significant number. That means the retail is participating more in Indian equity markets. There are two main reasons. As the market witnessed a sharp correction in March, from there is not even a V-shaped recovery, it is a ballistic recovery. So markets are observed that sharp rally in the market, and also The other investment avenues, the fixed income avenues and other income avenues, if since there is no clarity, real estate, there is no clarity how it's going to pan out. It will take time to take off real estate, especially in India, and they are in a corrective phase in cities like Mumbai also. While coming to the fixed income and income, due to the all-time low interest rates in India, investors are looking for some risk assets where they can buy chips at a considerable low price. Are the large cap companies. They want to invest and they want to gain the returns in equity markets when compared to the fixed income assets in India. This is the reason that's causing the uptrend in the market. Of course, market have been kept on telling. But my observation with respect to the retail participation in Indian market is one bear hug comes in the market. Nearly 60 to 70% of these accounts are going to be dormant accounts over a period of time. The only investors with patience and the investors who understand the market and the behavior of the market, who never afraid of down dips in the markets and who invest consistently at these dips, these are the investors that are going to sustain in the market. The rest are all, I'm just telling you, equity market is a place where 90% of the people are going to lose their money, only 10% with a strategy, with patience, perseverance, and who can never afraid about downtrends. These are the people that are going to make money in equity markets. So my humble request to all investors, understand the market trends. Those people just because some of my friend told to open the account, some of my neighbor told to open the account, my relative told to open the accounts, those are the seasonal investors. They just come and invest at the top of the cycle. Once the market drifts, these are the people get wiped off from the market. So people who want to invest in a staggered manner and who cannot afraid about the market downfalls are the people going to stay in the market, and these are the people going to create wealth in the market. At WealthMills Securities, it's always our endeavor. We will make the investors to invest prudently, and we do the basic due diligence while investing in the market. Try to be an investor who can invest in stocks in a staggered manner regularly with your regular income while investing in the market. These are the people, they are going to create wealth in stock markets. The seasonal investors, they might succeed in one season, but not every time. This was the experience, and this is the data shows in the history, and this is the trend that's going to follow every time. Right now, the institutional participation in the market came down and the retail participation is going up in the markets. Yeah, while coming to stock specific recommendations, this week we have been advocating investors to buy a stock by name Larsen and Turbo. We have been encouraging the investors to buy in L&T because of the valuations of this stock are very favorable in the large cap segment. L&T is a diversified company. If you own L&T, you own the entire infrastructure space in India. First thing is the L&T have a diversified business model. They have subsidiaries, that is L&T Finance Holdings, which L&T owns 70%, and L&T have promoter holding and a significant holding in Mindtree, and L&T have significant holding. It have a subsidiary L&T Technologies, and it covers all the major infrastructure projects in India. Due to the restrictions on Chinese companies to do complete infrastructure projects in India, L&T is one of the key beneficiary. So we educate the investors to invest in L&T in a staggered manner, invest and buy L&T at every dip. The other stock, this stock I shared about this stock earlier. The stock name is Bharat Seeds. Bharat Seeds is an associate company of Maruti. In this Bharat Seeds, 26% of the holding is held by both Maruti as well as Suzuki. And also there are nominated directors from Suzuki International. What Bharat Seeds does is they supply seats to Maruti. As there is a significant rally in Maruti, Bharat Seeds is an unexplored stock. None of the fund manager tracks this stock. None of the advisor or analyst advises this stock. It's a wonderful company and the stock is at a cusp of a good rally. So we advocate the investors at every dip, try to accumulate Bharat Seeds, and this stock is going to create good returns in the days to come. Every dip, buy Bharat Seeds and accumulate Bharat Seeds in your portfolio. These are the stock specific recommendations we have this week. Please do take care about your health and God bless you. Thank you.